Welcome to our latest market analysis. Today, we're diving into some incredibly fascinating and highly unusual movements of capital happening right now across the global semiconductor market. If you just casually follow the financial news, you might actually think the semiconductor industry moves as one giant unified wave. But recently, we've seen something really strange happening right under the surface. Money isn't just rushing in and out of the sector as a whole. It's shifting in a very specific, deeply interconnected way.
To really wrap our heads around this, we need to understand a concept called stock rotation, and this is absolutely crucial to grasp right off the bat. Imagine capital moving like streams of light from one neighborhood of a sprawling city to another, rather than packing up and leaving the city entirely. Basically, even when the massive overarching theme of artificial intelligence stays super strong, the money is flowing between different companies. An investor might sell off shares of a massive tech giant just to buy shares of a crucial tech supplier. The money stays in the game, right? But the players taking the lead are constantly changing.
And that brings us to the core mystery of our investigation today. Is the rotation happening between individual stocks rather than across the semiconductor industry as a whole? Are investors treating this market as a single, unified block? Or is it actually a divided, deeply interconnected network where different nodes light up at different times? Well, to figure that out, we literally need to trace the physical path of an AI chip.
Section 1. The Advanced Logic Center. Let's look at the very foundation of AI. Okay, let's break down the two central pillars of advanced logic. Over on one side, we've got NVIDIA. They design GPUs, which stands for Graphics Processing Units. You can kind of think of them as the brilliant architects drawing up the incredibly complex blueprints required for AI. But here's the thing. NVIDIA doesn't actually build these chips themselves. And that brings us to TSMC, which is a massive semiconductor foundry. A foundry is essentially an ultra-clean, hyper-advanced factory that physically manufactures those chips based on NVIDIA's designs. Together, these two are the absolute center of the AI story. But, as we're about to see, they are definitely not the whole story.
Let's look at some confirmed hard market data to see this in action. On one specific trading day recently, NVIDIA actually declined by about 1% and TSMC was completely flat to slightly lower. Yet on that exact same day, broader semiconductor exchange-traded funds like the iShares Semi ETF actually surged by 4.7%. So how on earth does an entire sector fund surge when its two biggest stars are totally stalled out? Well, it's because on that exact same day, companies like Micron and AMD jumped by over 7%. This data right here proves that capital wasn't leaving the market, it was rotating.
Section 2. The shift to memory. Moving on to the next crucial data towers in the supply chain.
You see, raw AI computing power simply cannot function without vast amounts of highly specialized memory to constantly feed it data. And this brings us to a term you've probably been hearing a lot, HBM, or high bandwidth memory. These are advanced memory chips that are absolutely 100% essential for AI GPUs to rapidly process massive datasets. If you think of a GPU as this incredibly fast, high-performance engine, HBM is the high-capacity fuel line keeping it running. Without HBM, the entire AI process literally chokes.
So the market spotlight really seems to be rotating toward memory giants like Micron and SK Hynix. But we always have to be careful to separate confirmed facts from market hypotheses. We can almost never say stock prices rise or fall for just one single reason. Instead, here are the primary hypotheses circulating right now. First, investors might just be hunting for the next major profit growth area. Second, they might be anticipating major future supply shortages in HBM and DRAM memory chips. Or, third, they might simply be shifting their expectations away from GPU designers that they feel have gotten temporarily overvalued, and they're just looking for better value elsewhere in the chain.
Section 3. Japan supporting roles. Let's look at the physical machines building this AI hardware.
Now, as we follow this money trail deeper, we absolutely cannot view Japanese companies as just minor side notes or honorable mentions in the story. They are completely central to the physical realization of AI. The actual life cycle of a chip moves through some incredibly critical stages handled by Japanese industry leaders, starting with specialized manufacturing equipment, moving to rigorous high-tech testing, and finally ending up in incredibly precise back-end processing.
First up in this sequence, consider Tokyo Electron. When a massive foundry like TSMC decides they need to expand their production capacity, they don't just build an empty building, right? They have to fill it with highly complex, multi-million-dollar machines.
Tokyo Electron supplies the absolute precision equipment for deposition, lithography, and etching. Essentially, these are the machines that physically carve and build microscopic circuits onto silicon wafers. So, whenever capital expenditure in the industry rises, money inevitably flows straight to equipment suppliers like them.
But it doesn't stop there. Once those chips are physically built, they have to work perfectly. There's no room for error. And this brings us to Advantest. They provide the incredibly high-tech testing systems required for these semiconductors. As AI chips and HBM memory structures get increasingly dense and complex, the margin for error shrinks to literally zero. The more advanced the AI chip becomes, the more crucial and proportionally more valuable the testing phase provided by Advantest becomes.
Finally, we reach what's known as advanced packaging. Modern AI chips aren't just single flat squares of silicon anymore. They're actually multiple chips physically stacked together at extremely high density. Doing this requires cutting, grinding, and thinning these silicon wafers down to microscopic levels of precision, and that is the exact domain of a company called Disco. These immense technical requirements are drawing significant market capital directly to back-end specialists, because without them, the physical stacking of AI memory and logic just wouldn't be possible.
Section 4. A divided semiconductor market. Let's map out this ecosystem.
So now that we've mapped out this massive global ecosystem, let's revisit that central question we started with. Is the rotation happening between individual stocks rather than across the semiconductor industry as a whole? The evidence we've just walked through strongly suggests the answer is yes. The market isn't just buying a broad basket of semiconductors as a single idea anymore. They are carefully dissecting and analyzing the individual organs of the semiconductor body.
When we step back and analyze the flow of capital across the network, we can see very distinct nodes lighting up at different times. You have advanced logic design and foundries. You have memory and data storage. You have precision manufacturing equipment. And you have testing and advanced packaging. Money is constantly moving between these specific nodes based on very specific questions investors are asking. Where's the next big growth potential? What do the capital spending trends look like this quarter? And exactly which stage of the supply chain is about to face a massive bottleneck or shortage?
And really, this brings us to the core takeaway of our analysis today. The semiconductor market is not one unified group. The leading stocks inside the industry are constantly changing as the intense focus of AI investment evolves and matures. Smart investors are always hunting for exactly where the next wave of AI profits will emerge. They aren't just buying the entire sector blindly. They are strategically and constantly rotating their capital to the exact point in the supply chain that is primed for the next stage of growth. Section 5. What comes next? Tracing the future flow of tech and capital. Up to this point, we've seen Japan playing an incredibly powerful, yet technically supporting roles in equipment and testing. But Japan has recently begun pursuing a major, bold new ambition. It's a national project called Rapidus, and Rapidus really symbolizes Japan's massive goal to move from a supporting supply chain role directly back into the ultra-competitive field of advanced logic manufacturing itself. Now, we aren't going to dive into the deep technical details of that today, but in our next analysis, we're going to ask whether Japan is truly destined to remain only a supporting player, or if they can reclaim the center stage.
As we wrap up today's investigation, I want to leave you with a final thought to keep in mind as you watch the global financial world unfold. Reading the news alone is not enough to understand the market. The real question is what the market is actually watching. Let's continue exploring that perspective together.